Jiten, good afternoon. Jiten, tell us about your thoughts on the market, the angle which you are taking right now, that market is facing near-term headwinds, but if you look at longer term, there are big tailwinds. Explain your the way of looking at the markets right now.
Yeah, so short-term headwinds we do have. I mean, we have geopolitical challenges and the US and European recession, especially Europe, I think can be more severe. Uh, Domestic crude has inched up a bit. Dollar is down. Uh, Inflation is still higher than what RBI would wanted. Interest rates have trended up a bit. The 10-year has crossed 7.5%. So these are some short-term, headwinds which we see. But I think long-term we see a lot of tailwinds in the India growth story.
Okay. How are you looking at valuations right now? We are just at the start of the earnings season, and there are concerns that margin pressures may still be evident in this particular earnings season as well. What are your thoughts there?
I think I think earnings should be good. Margin pressures actually would have come down for a lot of companies as commodities have softened. Uh, so we should see, I think we are very positive on the earnings, at least in the universe which we track and which we hold and which you have recommended. Most of them, we believe that should deliver good earnings.
Jiten, you are more focused on domestic-centric sectors. Tell us 4-5 big, not holdings in terms of stocks, but what are the 4 or 5 sectors in which your entire portfolio can be categorized into?
So before I come to that, why we think, we should invest more on domestically focus is important. One is, India is probably one of the larger economies which is going to grow at a very decent pace. I think right now the estimations are 6.5 to 7.5, which is still good. Tax collections are very resilient and going up. Government spend is quite good. Capacity utilization in the listed space has gone up quite a bit, is at a decade high. So obviously there will be, spending towards capex. Credit growth we have seen is above 15-16%. Emerging market weightage of India is going to increase. We have seen it increase in the past, and I think that emerging market weightage in the MSCI index and other indexes will improve. So these are the factors why we think India should do well. As far as sectors are concerned, financials, capital goods, infra is one sector which is completely domestic. Auto ancillaries will do well. Defense, real estate, even paper. These are some of the themes which we are invested into and which we like.
How's the earnings quality of the universe you are invested in right now looking as we stand today? Do you see good visibility of 18-20% from here on?
18-20% growth you are talking about, or
earnings growth? Yeah.
Yeah. So I think a lot of them would obviously have that growth, maybe even upwards. Some obviously will be, sort of contra sectors where, for example, cement is something which we hold in our portfolios. That will not have a good earnings. There will be challenge there. So the contra ones might obviously not give that earnings growth, but most of the other ones, the ones which were contra last year for us, will show good growth. So, and for cement, we expect in the future, we should see good earnings growth. But I think this quarter will be tough.
I remember paper is one area which you had really taken a bet on pretty early. Do you think the story is still intact there and visibility is good for earnings growth and margins and demand, etc.?
Oh, absolutely. I think paper companies will show very good earnings. And we believe that, I think FY23 would be a great year for paper. We should see record earnings in most of the names, which we have not seen earlier.
I see chemicals is also one area which is back on your radar. We saw big re-rating in chemical and then 2 years of good corrective phase, I would say. Now the commentary for many of the chemical companies seems to be suggesting that the capacity addition next 2, 3, 4 years, in some cases, is almost at the same level at the entire gross block. Have you gotten back to your earlier previous favorite names, or are you looking at new opportunities? How come chemical is back on your radar?
So chemical, we had suggested some time back to our subscribers. We believe that chemical, the Europe plus one, the China plus one obviously was playing out, but I think Europe plus one will also play out a lot, and chemicals will be one of the beneficiaries in that. And I think for us to take away some market share from Europe and from China will not be that difficult, and that's why you're seeing this large capex by a lot of names. So really, this sector looks structurally good, and I think even currently there are stocks at very decent valuations available. So that is a sector which one should look at least from minimum 2-3 year perspective. This sector should give good returns, is what we believe. Apart from that, manufacturing is something which we think will also benefit. There is a probability, of a lot of manufacturing moving from Europe to India. So that sector is something which we think will do very well too.
So how are you looking at this capital good kind of direction to attempt a manufacturing play? Because when we look at the large sector leaders kind of names, there, yes, growth is there, visibility is there, but the valuations have also run up quite a lot. Or are you looking at the mid to small cap universe for playing the manufacturing capital goods story over here?
Yes, mid to small cap is what we have looked at, and you probably know since our interviews from the last year also that we invested early into this theme, and we still continue to hold most of the names which are there in capital goods with us. Most of them are mid to small caps, and already these have given us very good returns, but we still believe that there is still a lot of room to go for these companies, and we continue to remain positive on this. Obviously, one has to buy fresh, then any dips or any corrections is something which one should look at to add into these names. But see, the thing is, the capital goods sector has had a long downturn, and it just turned around. And what we have seen from our experience in cyclicals is that after long cycle, the turnaround does stay for a while. So we expect this cycle to play well at least for the next 2-3 years minimum. So this and also, as I mentioned earlier, capacity relations have gone up quite a bit. So obviously there will be capex needs for companies, and capital goods obviously will benefit from that.
Right. One last quick word. Want to understand what new areas are you researching right now and are aiming to add, or any new recent read which is showing up any good trend for coming months and years?
So I think from our last interview, we are continuing to stay with the names or the sectors which we have invested into financials is something where we had zero bets, but in the last few months, we have quite a good coverage in financials. We continue to like them. Uh, the, there are some people who are concerned about, NPAs coming in, but we think that it will be at least 2 years away. So we do have, a good runway for them for at least 2 years is what we think. So that's where we are increasing. We are just, basically some of the sectors where we believe major run-up has happened. We would mind, where risk reward might not be favorable. We would not mind to, cut some of those names and look at the existing sectors where, risk reward is in favor. So that's the kind of, calibration we do with our research. So one more sector which I would like to, look at in the future is IT. I mean, IT, if you remember, we have been negative for the last 3-4 quarters. And it has played out that, there is a significant correction has happened. We still believe that, there should be some more correction for us to, look at that sector. See, long-term wise, there will be decent growth in the sector, but valuations had run up quite a bit. A lot of the names where we were expecting 10% kind of earning growth were trading at 40 times and so on. So if that moderates to let's say between 50 to 20 times, then we might look at names in that sector.
All right, Jiten, we'll let you go in that one. Thanks so much for joining us today. That
Thank
was
you.
Jiten Parmar of Aurum Capital sharing his thoughts on the market and the areas we are looking at.